Good afternoon, friends. Uh, I think my screen is clearly visible to all of you, and my voice is also very loud and clear. So please just wait for a moment. Then we will begin today's Bazaar Pe Charcha session, maybe next maximum 1 or 2 minutes. So just wait for a moment. Okay. So let's start today's Bazaar Pe Charcha. So first of all, welcome all of you. Today is 19th September 2024, Thursday, and myself, Pawan Jaiswal from Team TraderSmith. And today we are going to join Rahi, my colleague, Rahi Masum Raja and Yatisha Nair. They will also be They are also joining this Bazaar Pe Charcha session, and they will be here to help you to understand about market, and we will try to answer various queries regarding stocks and market. So let's start. And before starting, disclaimer that registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. And our company name, registration number with SEBI, office address, compliance officer details, phone number, email ID, etc. are given. So, this is the first slide to understand the current market status as per O'Neill methodology of market direction. As you know, we follow a unique approach to capture the market direction, and that is the O'Neill methodology. Under that, we categorize the market in 4 different segments like rally or confirmed uptrend. Here we can see in Nifty 50, Sensex, and reality, and other like IT, financial services, and FMCG. Next is status stage is uptrend under pressure, where you can see that the banking index, energy, metal, auto, and means trend is positive, but yes, it is facing some resistance in upward trajectory. That is why we call it uptrend under pressure. Next is correction, that is a clear cut downtrend, and next stage is up and next up after correction there is I can say that reversal. So there are 4 categories, and in 4 categories we get as per O'Neill methodology we categorize the market in all these 4 categories. And if you see here, our current Indian market including various sectoral indices, these all indices either in confirmed uptrend, that is rally, or uptrend under pressure, that is under pressure. And if you see, so Nifty 50 and Sensex both benchmark index is in confirmed uptrend. Apart from that, other sectors like realty, pharma, IT, etc., financial services, and FMCG. But at the same time, major sectors like energy, metal, and auto is in uptrend under pressure. And in performance table is given over here. If you see in last 1 week, there is a mixed picture. I can say reality is the biggest performance, which has gained more than 3%, followed by banking space, generated almost 2.5% to 2.7%. Biggest loser is IT index, that there is a loss of 2.5% around, followed by pharma. And likewise, 1 month return, 3 month return, 6 month, and 12-month return is given as per of Nifty 50, Sensex, and other sectoral indices. To understand the further market technically, actually how it is technically placed and all. So let's move one chart that which will really help us to understand about market. So as usual, first I am starting with Nifty 50. So you see Nifty 50, if you remember last time in last Bazaar Pe Charcha, we have clearly mentioned all these levels. Like the day it will cross the level of 24,000 kind of 24,800, 24,900. Then one can expect the level of 25,500 to 25,700 kind of level. Today, I can say that Nifty has achieved almost 25,600 kind of level in intraday, and after that there was some correction happened in intraday market. So I can say levels point of view that we are entered into that trajectory. Now, what next from current level? So this level of 25,500 is a critical level to watch here. Because if you see from the last 3 4 days there is some little bit consolidation happening, and there is a series of doji formations are happening on the daily chart. Here you can see, if you can see, after this particular breakout on 12 September there is a series of doji formation happened in last 4 trading sessions, and after 4 trading sessions of consolidation there was a breakout happened again, but it failed to hold about 25,500. And after touching or crossing 25,600 kind of range in intraday, there was some profit booking up and a higher level from the index perspective, and as well as a market perspective. So from here I can say uh, to turn remain or to remain more bullish from current level, Nifty 50 must hold about 25,500. Then only we can consider that valid breakout, and maybe index would ready to move toward 26,000 in coming days. Otherwise, suppose it will remain traded about 25,500, then I can say market may remain, or Nifty 50 may remain traded in little bit of consolidation zone. And that consolidation zone is approximately 25,000 to 25,500. So there are two, three criterias are here as per our analysis point of view. First is this holding about 25,500. So maybe ready to move toward 26,000. Second is that if it is not holding about 25,500, then maybe it may remain trading in little bit consolidation zone, and that zone is 25,000 to 25,500. And third, big support area. So 24,800 to 24,700 is the big support area from where this index took support in last week, and from where some sharp bounce back happened. But suppose it will breach that 24,700, 24,800, 24,700, then only we will consider there is a serious downtrend, otherwise not. Currently, if I talk about market placement perspective, so or our analysis point of view, I can say that most probably Nifty 50 may remain traded in sideways in the broader range of 25,000 to maybe 25,700 or 25,800 kind of zone, plus minus 200, 300 here and there, and I'm not denying for that. But as majorly, I can say maybe this our benchmark index Nifty 50 may remain traded in the broader zone of 25,000 to 25,700, 25,800 kind of zone in coming couple of weeks perspective. Otherwise, technically, it is continuously forming higher top, higher bottom formation, trending above all key moving averages. Only one concern at current moment of time, I can say that there is some price momentum divergence formations happening on daily chart in Nifty 50 versus momentum indicators, RSI or other momentum indicator. That is the only. So maybe it may face some volatile or erratic move in coming days. Otherwise, overall trend and sentiment is positive. And if we talk about medium term perspective, unless and until index is holding about 24,700, 800, need not to worry about, or maybe we will consider as a bullish trend. But yes, but immediate short term perspective, to turn more bullish, index must cross and hold 25,500 to move toward 26,000. Otherwise, it will remain traded in the broader range of 25,000 to 25,600 or 800 kind of zone, in sideways zone, in terms of at least percentage gain and points gain in Nifty 50. Next is this Bank Nifty. If you see Bank Nifty, after so many months of underperformance, this time Bank Nifty is clear cut showing outperformance. And if you remember our last Bazaar pe Charcha session or last various video recording that we tried to analyze market for you, so there was a trend line that I have consistently mentioned here. This particular trend line that is called 51,500, 51,700, and our clear cut opinion was that unless and until this Nifty 50 will remain traded below 25, 51,500, 51,700, it will remain traded sideways. But the day it will cross and hold above 51,500, 700 zone, I can say there may be some positivity, and then Bank Nifty may start trending in positive trajectory with outperformance move. And this time again, after almost a year, if you see in this particular area, some consolidation happened and some underperformance. On it tried to cross 51,500, and finally there was a breakout, and now it has approached to 53,000. And from the last couple of weeks, it is a clear cut showing outperformance, I can say. Now, what next from current level? So now this Bank Nifty, which is a major index in our major sectoral index in our Indian stock market, has approached to 53,000, and now it may face resistance around 53,000, 53,000, 200, 300 kind of zone. And suppose it will cross 53,300, 53,400, then I can say once again it will enter into uncharted trajectory, and in such particular case, it would be ready to move toward 55,000 to 56,000 kind of zone. And the way index is moving, this Bank Nifty, and then the other components like SDFC Bank, Kotak Bank, ICBI, ICICI Bank, Axis Bank are moving. Most probably, chances are there that maybe sooner or later, or maybe after few days of pause, possibilities are there that it may take some little bit of pause around 53,000 plus minus to 300 point. And the day it will again cross that 52,000, 53,200, 300 on closing basis, maybe index would be ready to move toward 55,000 to 56,000 kind of zone in a upward trajectory. So here I can say out of this Nifty 50, or I can say overall Indian market, Bank Nifty has the biggest weightage, and Bank Nifty, if it is showing this such kind of positive move, so maybe market is not going to fall in coming days at least. But yes, other sectoral indices, if it will pull down downside, then I can say net to net market will remain in positive trajectory only, with little bit of volatile move in Nifty 50. So Nifty 50 is looking not that much, after so many times I can say Nifty 50 is not looking that much positive. It is looking positive, but not that much positive. Like I have just discussed the levels and everything. But Bank Nifty, yes, after crossing and holding over 52, 53,200, 300, may be ready to move toward 55,000 to 56,000 kind of zone in coming few weeks in Bank Nifty. Apart from this Nifty and Bank Nifty, other major indices is Nifty IT index here. Uh, One second, let me first remove this. So Nifty IT index next. And if you see, Nifty IT index is in clear-cut uptrend, but there is a big fall happen in today's trading session only here, I can say, and there is a big bearish candlestick formation happen in today's trading session, and some profit booking happen, and majority of the IT stocks has shown sharp correction. Now, next support area is this 50 DMA, that is around 40,800, then followed by 40,000. So maybe I can say 41,000 to 40,000 is this area where it may take little bit of support. But suppose it will breach the level of 40,000, then I can say further downside accelerate in Nifty 50. But as currently time being, I can say overall structure and everything is quite positive in this IT index. So we are just expecting that this is a normal course of correction for time being. But yes, one thing is very clear, that maybe in coming few days, this IT index may remain traded little bit volatile and choppy. Further, if I draw a trend line from here, from where this trend reversal happened on just 4th June. So now it is on the edge of this particular chart is on the edge of giving upward sloping trend line breakdown. So suppose it will give breakdown below this and maybe it remain traded above 41,000 especially, then I can say maybe ready to move toward 38,000 kind of zone. Otherwise, suppose it will give bounce back from current level, so maybe possibilities are there that it may turn more bullish in coming days. But yes, the way now structure emerged, and that today stock, this particular index has formed evening star candlestick pattern, and then after analyzing price momentum and other various factors, and especially US market, there was an interest rate cut happened in US market, and taking cues from that, maybe after such kind of very beautiful move happened from the 4th June, from the level of almost 32,000 to almost 43,000, almost 11,000 points of gain. Maybe this index may fall further from current level, but yes, so from the short term perspective, I can say 41,700 is a key level to watch. Immediate support is a 41,700, then followed by this 41,000 or 41,000, and then followed by 40,000 also, up to 38,000. So maybe I can say from current today's point of view, or today's price point of view, this 41,800, 41,700 is a critical level to watch. Suppose it will remain traded below that range, so maybe one can expect next target would be 41,000 followed by 40,000. And suppose it will breach 40,000, then only we can expect the level of 38,000 kind of zone. But yes, immediate support I can say is uh, 41,800, 41,700 followed by 41,000. So chances are there it may fall. Just keep tracking this upward sloping trend line. Suppose it will remain traded below this, below 41,800 kinds of, then the possibilities are quite high that it may ready to move further in downsward toward 41,000 followed by 40,000 kind of zone in coming few trading sessions. And suppose it will breach 40,000, then only we can expect the level of 38,000. But yes, from the next few trading sessions point of view, chances of falling below 40,000 is little bit less. I'm not saying it may not fall, it may fall, but yes, chances are comparatively low. But yes, now after today's candlestick formation and then evening star pattern formation and price momentum analysis, I can say that at least maybe index is ready to fall below 41,800 and may be ready to move toward at least 40,000 kind of zone in coming days. And beyond 40,000 only we can expect the level of 38,000. Then the time will only answer that this particular question whether it will go or not in Nifty IT index. In Nifty metal, same. If you see from the last almost a couple of months, we are consistently saying that this metal index is comparatively in downward trajectory. It is consistently forming lower top, lower bottom formation here. Again, this time it failed to cross this level of 95,000, sorry, 9,520 or 50 kind of zone on closing basis. So now here, I can say this 95,050 or 95,020 is a critical, 9,520 is a critical level to watch on closing basis. Suppose it will cross and hold. Suppose, one second. Yeah. Suppose it will cross and hold this 95,000, 9,550 and remain trading above that, then only we can expect that it would be ready to move toward 10,000. But suppose it will not, then I can say that this current ongoing structure of lower top, lower bottom formation is in continuation. And maybe again, this particular index, Nifty Metal Index, is ready to move toward again 87,000 to 8,500, 87,000 to, sorry, 8,700 to 8,500 kind of levels in downside. So structure is still lower top, lower bottom formation. Just 9,550 is a level to watch in upward trajectory. Suppose it will cross and hold above 9,550, then only we will consider uh, a change in current structure, that is from a lower bottom to upward trajectory, otherwise not. In my opinion, most probably this particular index may remain traded in little bit of sideways kind of zone of 100 200 points here and there in the range of roughly 9,000 to 9,700 or 9,800 kind of zone. I can say roughly plus minus 200 or 300 points here and there may be happen. But yes, I can say broadly it may remain traded in sideways zone of 700 800 in Nifty 50. Sorry, metal index. So in my opinion, it is not looking that much attractive. Yes, 2 3% or 5 6%, 700 points here and there move may remain and happen. A little bit of sideways kind of zone in Nifty metal index from the next couple of weeks perspective. Apart from that, I would like to draw an attention further in today's trading sessions market action. So today, if you see, even though or despite of the market was at all-time high level beyond 25,500, there was a sharp profit booking happened in broader market indices. If you see this Nifty mid cap index or Nifty small cap index or NSE 500, there was a sharp, um, I can say, fall happened in intraday's profit booking happened. And the way profit booking was going on in this broader market, I can say maybe this profit booking may remain in continuation in coming days as well. So just keep watching broader market indices. Maybe Nifty will not fall that much in coming days, maybe tomorrow on what trading session says, but we can expect some erratic kind of moves in broader market indices like NSE 500 or Nifty mid cap index or Nifty small cap index. So, so now from the index point of view, that's it from my side. Now my colleague Yatisa is here. He will discuss few sectors. Then Rai will also join, and we all are here to discuss various numbers of stocks queries that would be asked from your side. So Yatisa, please,
Yes,
it's to you
thank
now.
you, Pawan.
Thank you.
So let us discuss the next key sector is Nifty Auto. So if you see Nifty Auto, this is a daily chart of Nifty Auto. So if you see here from that last almost from the June onwards, the indices has been trading in this consolidated zone. So after the very bullish run in the last, especially in the especially from the lower levels. So it's kind of consolidating the levels in and around its 50 DMA, and now it has become the moving average has become the flattish zone. And if you come to the key levels, if I draw a trend line from the connecting the highs of the recent high which was made, so that is a key level to watch on Nifty Auto. So if it breaks out above that level and sustains above that level, then we might see some more upside. But however, looking at the current picture where the festive season and the festive season yet to be it's already started, and let's see how the vehicle now produced and sales have been done. So we'll get that clear picture in the next October November time. So let us wait for that number, and Nifty Auto might trigger from that, and it might give a breakout or breakdown from that level. So key level to watch is this breakout, this triangle level. So key support level is placed around this upward sloping trend line. So if that is also near to its 100 DMA. So one can keep close watching in this auto space where this levels on the levels for the either upside or downside window. And next one is Nifty Pharma. So if you see the Nifty Pharma, there has been a very good breakout level. After that, very indices has given a very good return from the last 2 3 months. And after that, if you see from last couple of days, even though volume is down, the index has been a little bit sluggish, where slight profit booking is happening. And today it has touched that 21 DMA, which is a very crucial level. And also, if you see, if I draw a trend line, upward sloping trend line, so that is also key level to watch on Nifty FMCG space. So If it holds that 21 DMA in the coming session, then well and good. If not, some more profit booking might be on the cards in Nifty FM pharma space. So it might witness it might head towards 50 DMA for the next crucial support. Next one is Nifty FMCG. So this sector is outperforming among the peers after especially Bank Nifty. So FMCG sector has been not giving up any gains, major gains, and after that breakout from this horizontal trend line, so it is holding on to its 21 DMA. So anything close below its 21 DMA will be act as a slight profit booking level for Nifty FMCG. Until then, one can continue this ride trend in the FMCG space. So there is no weakness so far in this particular space. So also one can go for a rising trend line support where the connecting the lows of recent couple of lows. So that is also one very good support level for Nifty FMCG space. And the next sector is Nifty Realty. So Nifty Realty here also indices has been making lower low, lower high price formation. However, if you see from last 1 week, indices currently coming up, and there is showing some kind of strength in this particular sector. So one can keep looking, watching this space where if this trend line breaks out above this trend line, then we might see some more upside in this particular space. And the key support level is placed around this level. So that is around 1050 kind of level. So that is a key support area for Nifty Realty. So anything breaks out about this level, then we might see some more upside towards its all-time high. That is around 11,150 kind of level. So we might see that in Nifty Realty. And the next space is Nifty Energy. So here also, the indices has been trading in the sideways range. And also, if you see all the three key moving averages like 50, 21, 50, and 100 DMA are now it's making a horizontal line. So it's converging each other. So it's trading in the sideways range, and it's also if you see that this price range cluster of 44,000 kind of level, that is a very crucial resistance level for Nifty Energy space. And if it closes above that 44,000 level, then we might see some bullish trend likely to continue in this energy sector. But as of now, it's continued to trade sideways with the support at its 100 DMA. So anything closes below its 100 DMA as well as this price range cluster range of 41,700 kind of level, then we might see some more pullback, and it might come back towards 200 DMA as the next support level for Nifty Energy. So I think we have covered majority of the sectors, and I think we can go for the uh, question and answer. So can you all can you open the chat
Yes, so
box?
please open this chat box so people can start asking questions, and we will try to answer maximum number of queries today. Rai is also joining to answer question and answer. Yeah. So first question for the day is oh my God. Let's take a JSW still, Yatisha, first.
Yes.
There is a big question. Just give us a couple of minutes. We will answer that. But first, we are starting JSW still.
Okay. So JSW Steel. So steel where it's, if you see the chart pattern from this daily daily as well as weekly time frame. So if you see there's a large consolidation base, it's trading in the range. So also if you see the daily chart, so that one level that is that is 950 kind of level. So that is a very crucial resistance where it's taking multiple strong resistance around that level, and the stock is after hitting there and failing to hold that level, and once again coming back towards sideways trend. So that's happening in JSWC. So as of now, so there is no major signs of any weakness in this particular stock. But if whether we can buy in this particular stock, it's a very difficult call. Where if something happens like this, where your money will be stuck for forever. It's like if that breaks out about that level 960 kind of level, then is very good. Then if it comes back towards this consolidation range, so one can go with swing low as a stop loss, or else one can go with a upwards trend line, upward sloping trend line as a stop loss in this particular stock. So it's right now it's in the crucial support range. So anything can happen in this particular stock. So those are already holding this stock, continue to hold, but to keep the levels at least of 50 DMA or this rising trend line. Next one is
So one
NCC.
question in between, Yatisha, I would like to answer one question. This Nikhil is asking about this Can Slim and this stock added in TraderSmith. The first thing that TraderSmith, under TraderSmith, we only not follow this Can Slim. We follow other technical parameters on also. First thing. So it's not a pure Can Slim based recommendation in TraderSmith. While in MarketSmith you will find only pure Can Slim, but we are in TraderSmith, we follow other technical parameters. First thing. Another thing is that here is the little bit we follow trading approach like 3-4% on an average loss, and 8-10%, 8 to 10% kind of gain, 1:2 kind of risk reward ratio. Another thing is that he is asking for that we have removed 5 to 7 stock. So today, because we removed, because as I told you that we follow 3-4%, 5% kind of loss maximum on an average basis, 3 to 5% in between. And today there was a sharp profit booking happened in broader market, and because of that there was a sharp fall happened in various stocks, especially stocks from the mid cap and small cap. So that was the reason forced to remove that stock in today's trading session. Otherwise, it's a pure trading approach, a pure trading mentality. So it is a best suitable for you. It's a like winning more and losing less. Even though if our success rate is 50-60%, but yes, if we are following appropriate risk reward ratio and all, so over a period of time you can gain. So it is like that. So yes, it's not a purely canceling kind of recommendation. It's combination of various technicals on the basis of price chart, on the basis of price momentum analysis, volume analysis. There are other various factors, moving average, RSI, MACD. So many factors are there. News factor is also there, or sector rotation factor is also there. On the basis of that, we give recommendations from the short-term trading perspective. Generally, our losses varies on an average in the range of 3-4% or 5% maximum on over a period of time average basis, and loss gains are in the range of 7 to 10% kind of zone. Yes, Atisha, please.
Okay. Next one is NCC. So NCC, clearly we are seeing some downfall over here in the price chart. So there is a very good breakout. If you see a large sum of consolidation range, where there's a very good breakout, but that breakouts failed, and eventually it breached that 50 DMA as well. And currently it has breached 100 DMA as well. But if you see the volumes are lower, it's not happening not only in this particular stock, it's happening in the overall broader market. So stocks are slowly and gradually is coming down, and majority of the breaks out or are failing. So that is happening in the market. So right now, one can avoid this stock right now, in this particular market. So anything closes above and holds above this 340 kind of level, then one can see this particular stock. Next one is NTPC. So NTPC, it's a news related stock where today NTPC Green Energy stock, they are filing an IPO. So because of that shareholding quota, the stock has been under news where that most active stock where is also very on the high, and it's trading near it's already breakout level, advanced level was given around that 406 kind of level. So after that is trading, today is opened a gap up and trading in the sideways range, and those who are willing to take the risk, it's a risk of 50% is around 5%, but it's a swing low. The major support level that is around 100 DMA, nearly 100 DMA, that is around 10%. So will those who are willing to take the risk of 10%, then one can look for this particular stock uh, in their portfolio. Next one is Shriram. Shriram, I think I'll take as Shriram Finance. So Shriram Finance, it's already stock is gained from the cup with the handle base, and currently trading around 16% from the pivot level. So fresh entry can be avoided as of now, but willing, those who are already holding this stock, one can wait for another 25% kind of level, then book a partial profit in this particular stock. But the fresh entry can be avoided. So if it comes back towards this 21 DMA or 250 DMA, then one can look for the fresh entry in this particular stock. But as of now, avoid this. Next one is NALCO, National Aluminium. So here also, where the stock is once again moving towards in the consolidation range. So it's making a slightly lower high, lower low price formation, and the levels are key levels to watch is this particular day high low. So 190 kind of levels. So there is a huge resistance in the range of 190 to 210 kind of level. So that is a key resistance area for this particular stock. So if it breaks out above that level and so holds that level, then we might see fresh upside. But as of now, it's likely to trend likely to continue sideways in the coming days. So one can avoid this stock right now, but those who are willing to take the small gains, so one can look for buy above this particular 190 kind of level.
Jatisha, may I take some of the...
Yeah, sure.
Okay. Okay. So I am taking Bank of Maharashtra. So my Bank of Maharashtra is actually trading in the consolidation phase, and if you look at the chart, that a stock is actually forming lower low as well. It has also breached its long term in the moving average 200 DMA. And as of now, I would not suggest to buy this stock, especially when it is price is actually falling in this. Price has been deteriorated. The next stock is IRFC. So IRFC is also trading in the consolidation phase, and after hitting is the recent high at 229 on 15th of July, the stock is actually witnessed profit booking, and it has actually got support near its 200 EMA, but it will be really difficult to say whether it will hold it or not, because it might breach it next day or on Friday or maybe on Monday. But if it is holding above that level, then we can have that stock in our watch list. It is actually, it might form a base from that level, maybe. The next stock is PPL. So PPL is also trading in the consolidation phase from the past 2 weeks after hitting its recent high at 667 or 668 level. And the stock has also breached its 21 DMA. So if someone is holding their stock and if they're sitting on the profit, they might, and they can wait for the 50 DMA. Otherwise, as of taking a fresh entry in this, I will not suggest to take the fresh entry, especially for those stock which is actually falling and price is actually deteriorating. The next stock is rights. Rights is actually looking very volatile, and if you look at yesterday trading session, it has formed the low of 591. So, and it has actually got support, or it has reclaimed it yesterday only. It's 200 DMA, and आज के trading session it has actually protected as well. But as of now, I will not suggest to, because at least it has to surpass this recent the recent 1 week high at least of 723, or I can say 725 to 30. It is trying to reclaim that level, and if it is trying to surpass its 100 DMA at least, then one can think of it. But looking at the chart, I will not suggest. It will too early. We need to monitor the price action, how it is behaving, and based on that, we can take your call. Itisha, what is the next stock? Can you tell me the name of stocks and I can just open it here?
You can take Deepak Nitrate.
Okay, so this is the daily chart of Deepak Nitrate, and Deepak Nitrate is actually forming flat base, and it is also in the consolidation phase as well. So the price action is deteriorated, and from the past 4 days, it is closing on the negative note as well. So I think we'll have the ample of stocks which we can have in our buy list, and we can just monitor the price action, and when it is forming the base, and from that base level it is trying to move upside, then we can take the call. But as of now, I would not suggest to buy the debug net rate, because price is falling, and if you look at its volume is not that high, but still the price is actually deteriorating in this. The next one.
Sudarshan Chemical.
Uh, one minute, Rahi, only. One question is there, that how much importance do we give to RS rating while we are making buy decision? So see, RS rating means relative strength. Uh, I would say, in technical analysis, there are two factors generally we consider. One is internal factor and another is external factor. So there is one indicator, that is RSI, relative strength index, that is RSI, which measures stocks or sector or index internal strength. Means it compares momentum against price. Like if you are analyzing TCS, so TCS price and TCS momentum on the basis of price, and that momentum is calculated on the price pattern of certain period, like standard is 14 period. And likewise, relative strength is a comparative analysis. Comparative analysis means if you are analyzing TCS with Nifty 50 index, or TCS against IT index, and if relative strength is gaining, then I can say this particular stock is outperforming. And if it is not gaining, then I can say stock is underperforming. If you see, or if you are continuously following us, Bazaar Pe Charcha, so from the last so many minutes, we are consistently saying that this bank Nifty is not performing good. It is comparatively underperforming to market. That was on the basis of relative strength only. So if any particular sector or any particular stock is comparatively giving good sign of move in upward trajectory or downward trajectory, on the basis of that we can say that that particular stock or index is outperforming and underperforming. Now if we're talking about importance, obviously it has a very good importance. If you are checking and you are analyzing, and if you see the stock is relative strength chart of any particular sector or any particular stock is consistently gaining, then we can say at least this particular sector or this particular stock is comparatively outperforming to market or underperforming to market. So yes, while investing, I'm not saying it is that much good is in short term trading, but yes, it has a very good importance is comparatively buying and holding positions, or having mid to long term perspective, that relative strength. Yes, please continue.
Okay, let me take few queries. The first one is Subros. So before we start, this is a standard disclaimer. MSI is still holding this particular stock. They have added on the verge of flat consolidation base breakout, and stock is slightly under pressure because of due to volatile in the market. But however, is still holding that 50 DMA. And please follow MSI for further in this particular stock. In this, so there is no weakness so far in this particular stock. Next one is Sterling Tools. So the after the sideways consolidation range, so if you see the weekly chart, so after the large consolidation base, the stock didn't move perform at all in the last 2023. But after that, there is a sudden spike uh, where it has given that breakout level from the cup with handle base, and currently trading around 2025 kind of 30% from the buy level. So those who are willing to take fresh entry in this particular stock can be avoided. So once again, if it comes back towards this price range of 490 500 kind of level, then one might see this particular chart. But as of now, fresh entry can be avoided in this particular stock. Next one is EPAC. So EPAC is also MSI is holding with the holding, and I think they have gained around 30%. So there is a vertical rally in this particular stock. So it didn't give any chance to buy and hold this particular stock. So many of them missed it. So at current level can be avoided. So once again, if it comes back towards at least some correction, then once again makes a small base. So once again you can look for this particular stock to make a fresh entry. But as of now, one can be avoid this stock for the fresh entry. And next one is Campus Activewear. So it's a Campus Activewear. If you see the from the lower side, it has been vertical rally, and it has given a cup base breakout also. So currently it's trading above that breakout level. So once again, if it comes back towards the 320 kind of level, then it's a very good buy. If it this hold this breakout level of 317 kind of level, then is a very good sign, and one can look for this particular stock in this particular range and continue this holding this for the further target towards 390 kind of level. And fresh entry at current juncture can be avoided, so look for the entry around the 315 320 kind of level. Next one is Canara Bank.
One more question, Yatish.
Okay.
One second, Yatish. Sorry. So one question is that why we study observe any sector indices and how regarding indices will benefit us from particular stock from that sector. So see, there are different approaches to analyze market. That is top-down approach or bottom-up approach. Like top-down approach is like you are analyzing first top like Nifty 50 or Sensex trend or sentiment. Then you are analyzing sector, and then you are analyzing stock. That is top-down approach. Uh, from from top to bottom. Like bottom-up approach means you are trying to find a stock outlier or out of any particular sector or anything like that, and then you are further doing that. Like let me give an example. Like few months back, if you see, last year I think IT was not doing good, but Tata LXI was really doing good, so that was one of the outlier. So from so you can find such kind of stock by following that top down approach. Generally, so there is nothing good or bad kind of thing. It's approach that which what kind of approach you are following. If you are see there is if you are following top down approach, like if you are first you analyze Nifty is looking bullish, then you are analyzing various sectors like banking, IT, pharma, etc., and suddenly you find that the pharma is looking quite attractive. Then you are started doing analyzing stock of pharma stocks, then you see that this IT is good, overall market is good, pharma index is good, and then there are 4 5 stocks or 10 stocks from pharma space which are really doing good. So on the basis of that, we can get some sentiment or some cues about market or some bias about or opinion about market that yes, market is looking positive. Out of that, pharma is looking positive. Out of pharma, these particular stocks are looking positive. So this is the one way of doing analysis. There is nothing good or bad kind of thing. What kind of person you are and what kind of analysis you do. Best popular, I can say, there is a matter of debate. Some people say this top-down approach is comparatively more beneficial. Some people say the bottom-up approach is quite good. It's up to person. Yes, but if you are trying to gauge the overall market sentiment, at least in my opinion, so this top-down is a good approach. But yes, it's a matter of debate. But yes, if you are following a top-down approach, so you will know that what is happening in market, what is happening in sector, and what are happening in stocks. That's it. So it is a way of doing analysis about market or any particular thing. Not only market, in our practical life, in our day-to-day life as well as. Yes, Yatisa, thank you.
Yes, thank you. And next one is Canara Bank. So Canara Bank, I will cover the majority of the PSU bank as well. So majority of the PSU banks are trading similar kind of chart pattern where it's making a large consolidation base. So it's a very good sign where after the very good rally in the last year, so once again stock is making a base, and one can look for this particular stock once it crosses and holds above that 50 DMA. And if you see the downward sloping chart, if you draw a downward sloping trend line that comes around that level, so one can look for this particular stock only once it crosses and holds above that 50 DMA, that is around 107 kind of level. So until then, one can avoid this stock, look for the levels for the fresh upside. Next one is HDFC Bank. I think on the disclaimer side, we are TraderSmith holding this stock, and we are, I guess, we have booked the partial profit as well. So stock is looking good. So it is it's now on the verge of a gap filling process. So we are expecting some more upside in this particular stock with the stop loss below its around its 50 DME. And next one is ICICI Bank. So similar to ICICI Bank, where stock is very good, private banks are doing very well, and it has given a very good breakout on the cup with handle base, and it's trading gaining slowly in this particular market. So those are already taken the position around this pivot level. So one can continue to hold with the stop loss below its 50 DMA. And Hindustan Copper. So I think it's Hindustan Copper is making a base of consolidation base, and there is a slight resistance around that level of 100 DMA. So that is around 350 kind of level. So once it crosses that level, so we might see some more upside in this particular stock, Hind Copper. So volumes are likely to coming in this particular market as well. So one can look for the closes above that 350 kind of level. Sorry, 340 kind of level. And GMR Airports, it's this stock also after the breakout from consolidation base, the stock is once again failed that breakout level. And it's if you see the moving averages, all the three key moving averages are now horizontally trading, and the trend is sideways from last one couple of months. So since July, it's trading in the sideways range. So once again, if it gives a breakout about this 100 kind of level, then we can look for this particular fresh entry in this particular stock. So until then, one can avoid this stock right away. And next one is Coal India. The Coal India is slightly on the negative side, and also I think it has reached that key support level, that is upward slope. There is a trend line, so that is also I think it's breached a long back, and it's facing a key resistance around this. One can avoid this stock right now. In anything closes and holds above this pivot level. So pivot level, then one can look for this particular stock on the fresh upside. So until then, avoid this particular stock. Rahi, can you?
Yeah, I'm taking it. I will take a Sterling first because Atul is asking from long time, I think. Sterling is not done, Yatisha, right?
Yes, it's done. It's done.
It's done,
Yeah, it's done.
but again he's asking. I don't know. Okay. So Tata Elxsi. So this is the daily chart of Tata Elxsi. The stock has actually shown buying interest, especially the buying interest was great on 26th of August and followed by 27th of August. But after that, actually, the stock is trying to fall. We can say there is a profit booking has taken place. And from past 2 to 3 weeks, it is actually falling continuously. And आज के ट्रेडिंग में इसने 200 DMA को भी ब्रीच कर दिया. So I think it is a negative sign as well. So as of now, I will not suggest you to buy the stock, especially one which is falling. So this is about Tata Elxsi. Finolex industry is also trending in the consolidation phase, but recently it has formed the base here and it has also made the recent low at 275.25 here you can see on 14th of August, or I think yeah, 14th of August, and then after that the stock has witnessed some buying interest. And this buying interest has also helped the a stock to reclaim its 100 DMA, 50 DMA, even it's to 21 DMA as well. But again, from the past 3 weeks, there has been some sideways move. और आज के ट्रेडिंग में इसने थोड़ा सा 2% का गेन किया, बट we need to wait and watch and whether we have to see whether at least it has to declaim its this first resistance level at which is placed around 327. So 330 to 332 might be your ideal price range to buy the stock. The next one is Vodafone. So looking at the chart itself, you can analyze whether you should buy it or not, because it is deteriorating a lot and it has lost 19% आज के trading में ही. So it is not looking that great. If you look at the volume part also, it is above average volume. So selling was actually intense. So I will not suggest you to buy the stock. The next stock is Hindustan Construction, SCC. So SCC is also falling and it is also forming uh, it has also breached its 100 DMA and it might retest its 200 DMA as well, which is just 5% away from this level. So you need to wait and watch and let's see where the stock is forming the base, and from there and from that base when the price action is actually advancing, and then you can take your call. The next one is Kens Technology. So it is looking good, attractive as well, and it is second base ascending base pattern breakout, and it is trending up its all key moving averages as well, and there is no sign of weakness so far. If you look at the EPS strength is 99, bad demand is A minus, so everything is looking good. Everything is looking great actually. The next one is Dixon. So Dixon is also looking good. There is no weakness so far. Only their past two trading has been volatile, and there is no weakness. The bullish momentum remain intact in this stock as well. The Sterling tool is already done. So Yatisha, you
Okay,
please
let
take
me
some
take few
queries.
queries. So first one is ITC. So if you see the ITC chart, so it's trading in the sideways range, and the key support area for this particular stock is the minor support I'm talking about. And this is a level where the upward sloping trend line, where is a couple of times it has tested that trend line and holding that level. And today also it has tested that level. Yesterday it has tested that level. So once again, if it has there is a breakout on this particular day, but however it's testing that 21 DMA as well. And if it holds that above that breakout level, then we might see some more upside in this particular stock. And this is a defensive stock. So in this, and also fundamentally very good stock. And if you are thinking to buy the stock, so one can look for this particular stock around this 510 kind of level, with the stop loss of either the rising trend line or the 50 DMA. Next one is HFCL. So HFCL, it's already the stock has been making higher lows price formation, and there is no sign of any weakness so far. And today it has tested that 21 DMA. So if you see from the last 1 month price pattern, so 21 DMA is a crucial support level for this particular stock. So anything closes below 145 kind of level, then we might see some more downside towards its 50 DMA as the next level of support for this particular stock. But as of now, there is no sign of any sign of major weakness. Next one is Tata Elxsi. So Tata Elxsi, it's I think based on the news, is in these 2 days it has gained more than I think around 10, 20, 20, 10, 15, 20, 30% is gained in this particular 2 days. But after that, there is a slight correction. At current juncture, whether we can buy or not, it's a kind of dicey situation where after this huge run, one-sided rally, there is it is a normal phenomena that the stock likely to correct. So if it comes back towards this level breakout area, so that is around 7,400 kind of level, then it is a very good. If it sustains about that 50 DMA, then it's we can say this breakout is well and good. But if not, the stock is once again moving towards the sideways range. So let's see, it's kind of a 50-50 kind of situation in this particular stock as of now. And next one is Gensul. So clearly downtrend. It's trending in the sideways range, and it's breached that key moving average of 200 DMA. So from the last March itself, it's trending in the sideways range. So one can exit right now in this particular stock and look for entry once again it crosses that 1,100, 1,010, 1,050 kind of level in this particular stock. Next one is Balrampur Chini. So stock is very good. It has been outperformed in the market, where after breakout from cup with handle base, it is gained around 30%. So those are bought much earlier, one can book partial profit in this particular stock. And if not, the fresh entry can be avoided because the stop loss is much deeper and is also extended from the lower level. So fresh entry can be avoided, but those who are already holding, one can book partial profit and continue to ride this trend in this particular stock. So Dwarka Sugar, its trend is negative. One can avoid this right away. So stock is trading below its 200 DMA, and there is no sign of any major trend change in this particular stock. So once it crosses and holds about that 200 DMA, then only one can see this particular stock and clearly avoidable. IRB, better to avoid as of now. So it's consolidating after the huge rally in the last year. It's common phenomena that it's consolidating in this broad range. So we might see somewhat downside towards 56 kind of level in the coming days if it doesn't holds this 50 DMA, and there is a strong resistance around this 100 DMA as well. So one can avoid this stock right away. Next one is Kalyan Jewelers. So jewelry stocks are doing well, and because of gold prices are rising and the huge demand for gold is still in India is very much, and festival season also there on the cards. So stock is gained already. It has gained from the pivot level. It's already 50-60%. So fresh entry can be avoided. So once again, if it comes back, if it makes something similar to this kind of basis, so small kind of basis, one can take a fresh entry. But as of now, in this kind of level, fresh entry can be avoided. So once again, look for the sideways trend or next base to happen in this particular stock and look for the fresh entry in this particular stock. Next one is ICICI Lombard. So stock is up. After that, there is a slight profit booking. However, from last 2 days, it has been reversed that level trend, and once again it moving upwards. So those who are willing to take the risk, one can look for this particular day swing low as stop loss. But I think it's a strong stock where this swing low won't be a proper stop loss for your entry current juncture. So it's a risk is very high in this particular stock as of now. So those are still willing to take the risk, take a swing low as stop loss and continue this trend. I think last one is Zydus Life Sciences, where I think it has formed a top around 1,300 kind of level. So it has once again coming back towards the consolidation range. So we might see some more downside towards its thousand kind of level might see in the next in the coming days. So clearly, those are already holding from the long time. One can exit from this particular stock and look for the basis to happen to take a fresh entry. So I think we have covered majority of the stocks. Anything left?
One question is left, Varroc Engineering. That was from YouTube.
Okay, Veroc, I think MSI is still holding this particular stock, and if you see the volumes are on the lower side, but buying volumes are on the higher side. That's the reason MSI are still holding this particular stock. So wait for the MSI to take a call on this particular stock. So follow MSI particular in this particular stock. I think next one is MGL Lupin. So MGL, before starting, this is a disclaimer. We are holding MGL from 1890 kind of level, and it has given a flat base pattern breakout, and the stop loss can be taken as 50 DMA or swing low as stop loss, and follow our TraderSmith approach for this particular stock. And if you see RS blue dot line is also visible. The stock is strong in this particular market as well. So we are looking to get around 10 to 15% gain in this particular stock. Let's see what happens. Hope for the best. And next one is Som Distillers Torrent Power, Gravita. I think alcohol-based products, I think few of the stocks are doing well, but a few stocks are not doing well in the alcohol space, where few like GM Breweries, Radico Khaitan, associated alcoholics are doing well, but few stocks are not doing well. So in this particular stock has made an attempt to from the lower level. It's made a base around this kind of around 100 kind of 105 kind of level. So it's made an attempt to break out, and today it has yesterday it has tested that breakout level, and there is a very good bounce back today as well. So those who are willing to take the risk, one can take 107 as a stop loss, but it will be a bit deeper. So the 107, 105 as a swing low as stop loss, and continue this trend rally. If it comes back towards, if it goes towards 134, 135 kind of level, then one can book a partial profit and continue this trend in this particular stock. Next one is Gravita. So Gravita is already ran up almost from the pivot level. It's almost double the money from the last 2000 kind of level. It's almost just the 2600 kind of level. So at current juncture can be avoided. Fresh entry can be avoided. So if it makes another base over base, then it's a very good sign. If not, fresh entry at current juncture can be avoided because it's already extended from a lot from the pivot level, as well as there is no major any basis happened in this particular stock, especially in Gravita. Then last question is Torrent Power. I think Torrent Power, it has given a yesterday. It has given a very good breakout from consolidation base, and today it is there is slight down. There is a slight profit booking, but its major any weakness has not shown in as of now. So even if it comes back towards 1725 kind of level, that is also possible in this particular stock. And if it once again breaks out that level, then it's a very good sign. One can look for this particular stock as the stop loss will be little bit deeper, where 50 DMA as it's trading around 9%, 10%, around 10% from the current level. So its stop loss is bit deeper. So those who are willing to take the risk, one can look for this particular stock. Think Sudarshan Chemical. I think we have covered Sudarshan Chemical, right?
I think we have not, Yatisha.
Okay. Let me take Sudarshan Chemicals. So it's already ran up from the lower level. So right now it's making a base over here. So there is a small base happening over here. So which is 1065, 1070, 1080 kind of level is a key resistance area. Once it crosses and holds above that level, one can look for this particular stock as swing low as 50 DMA. So that will be very deep. I think stop loss will be that time will be very deep. So look for that particular level for either side breakout or breakdown on this particular stock. So I think we'll wind up the session, and I hope majority of the questions we have answered. But even if we miss any stocks, please write to us through via email or Telegram. We'll definitely try to answer your query. So thank you for joining this session. Thank you, everyone.